welcome to my channel, and remember, this is not financial advice, but I want to slow things down and try to go over gold and try to be more detailed and maybe so you can understand it, be more educational. This is just educational. So with that, here we go. Gold. I want to talk about gold for a little bit. And we're going to talk about trend trade. We're going to talk about impulse legs. We're going to talk about a lot of things. We're going to talk about a 2618 trade. We're going to talk about a bearish bat pattern within trend. Yeah. So somebody told me they bought gold at like right here, 1950. I'm not even sure what the price was. But I don't trade gold. I don't have no gold. But I just want to show you what I seen. So when they told me they bought some gold here, I was like, all right, I'll look at it. And what I seen was this move here, a move from 1458 all the way to 2,058 bucks. For me, that allowed me to use this right here as a lower high. Okay, right there. And that also made this right here a higher, higher low. With that move, I was able to pull my Fibonacci tool from 1460 to 2,080 bucks. And I knew that if we pulled back down here to 1697, that it would allow people to, it would allow the best risk to reward on the trade. Right here at my high, and this right here a higher high. So all this was a pullback. All this, even if we pulled all the way back to here, it's just as long as we didn't break the higher low. But the 61.8 right here gives the best risk to reward on the trade. Makes sense. So this is the daily chart, and like each one of these candles is a day. And you can tell it's like zoomed out too. Reason it's zoomed, I mean, that's, to me, that's just the way it's trading. and this is all just a guess. So each one of these daily candles is like, it's a long time, right? So this would be considered an impulse leg. Right? Okay. Does that make sense? So with this, we would be looking for, if we're looking for like the best risk to reward on the trade, our profit targets would be extensions. First take profit would be a retest of the high at right here, $2,000. Take profit 2 would be the 127 extension, and take profit 3 would be the 1618 extension. You could just say 2,500. Makes sense? Because we would want to get our stop loss below this higher low. We would be looking for a retest of the high. Take profit 1, 2, 3. Follow me? But it all starts with the impulse leg. Like, you gotta find an impulse leg for me to that's where it starts for me. So yeah, let's delete all this real quick. You want to take a screenshot? So when I say it all starts with the impulse leg, we can go like, is this an impulse leg? This an impulse leg? This an impulse leg? This an impulse leg? So we could be looking at this, right? And let me, this is not really an impulse leg, but something to start with. Like, let's delete this one. So, but you can tell how it pulls back to the 61.8 right here at 2,000. You can tell right here. This impulse leg right here. Why is this one an impulse leg? Because it breaks previous structure right there. It goes down. So you could pull your Fibonacci from here to here, and you can tell that the 61.8 gives the best risk to reward. You can tell we pulled all the way back here to the 88.6. Alright, the rules for a bearish bat pattern are you would need an impulse leg from here to here. You pull your Fibonacci from there. I think this is a, well, there's a bat here too, but your bearish bat pattern, you would need a impulse leg down, you would need a retracement up to the 50%, you would need a 38 to 61, or you could come all the way down here just as long as it doesn't break this. But you can tell we got a like a 61.8 right here, and it goes all the way back up here to the 88.6. So, but it kind of breaks right here, so it forms into a Gartley pattern. But that's not the bat I seen. This bat right here is the one I seen. This is the one I seen right here. So we got a push down that breaks previous structure. We got a retracement to the 50%. We got a 38.2 right here. And we got an 88.6 up here. This is the one I seen. This is a bearish bat. And now we have another impulse leg down. So let's delete everything. So here's previous structure. Here's impulse leg. So the 61.8 would give the best risk to reward. Right? So with that being said, we know it can push down further. But also, we have this impulse leg, right? Why? Because it breaks this one. The 61.8 would give us the best risk to reward for a move higher to 25, somewhere up there. Right? Okay. Remove. Alright. With all that being said, I was talking about buying a little bit of gold. And I was seeing this right here. this 2618 trade setup. The 2618 is what most of the time we see at like an end of trend. And with this right here, we're seeing a downtrend. And again, I'm not trading gold because I did the math on it when it was like right here or something, and it was like $500 and something to even enter it. I don't have that kind of money, but I want to talk about this 2618 trade. And it consists of a double bottom. Right? Double bottom. What is a double bottom? A double bottom is where the right shoulder tests the left shoulder and closes above. This right here. So with this, we have a double bottom, hence the 2. Right? Alright, for the 2618 trade setup, you would need a double bottom. You would need a higher high, higher close candle. Right here. Right here. So it closes above, right? Then I would have to still be waiting, and I'd be pulling my Fibonacci from here to here. And I would say if price pulls back to the 61.8 at 1725, that would allow me to get my stops below this previous double bottom and a retest of this at 1800. Looks like 1800 be here, but 1793. This would be the pullback that I would be waiting on. You could look for extensions here. You could look for the 127 at 1828 or 1869. Or you could look for a retest of this high at 2000, because this would be an impulse leg too, right? This would be a pullback. So it took forever to pull back. I've been watching this for a long time. But we can see a pretty double bottom right here at the 61.8. You know? don't know. But that's kind of how I draw my Fibonacci's, and I know everybody draws them different. But that's kind of how I gotta have a starting point, gotta have something to, gotta have an impulse leg. Might have been a bunch of buy stops above this right here. Said if it closes above, pow, right here, this candle closes above. This candle closes above the 1750 right here. Swing candle. So I told my papa, I said we need to close above 1755. Boom. But yeah, even I'm not saying it's gonna pull back here, but if it price moved up, you would just adjust this, kinda. You would adjust this and just wait, wait for price to come to you. Wait for your trade. I don't know that it's gonna pull back here to 1725. It looks fancy. Looks fancy. Yeah. Oops. These psychological numbers, they play a role. They play a role. They seem to play a role. But yeah, I hope you can take something from it, maybe learn something. Maybe I'm not always right. I'm not not always right. They tell me to risk 3% each trade. It's hard to do. Alright. I'm still looking at this. Still looking at Litecoin. I do hold some of this. I bought here at 170, 195. I got 195, 170, 180. Bought some more. Bought some more. My highest order is like 204.20, I think. Yep. This would be an impulse leg. This would be an impulse leg. It breaks this. Right? I mean, this is all just a guess. But let me show you where it didn't just start doing this. Like, if we move all the way back to here, like right here. So the trends do end, like they do end. We have pushed way up there, That's why I say if we don't break 170, people look at me like I'm crazy, but that's the number. I didn't pick it. It just happened like that. So, I mean, if you're just looking like this could be considered an impulse leg, right? Right. Why is it an impulse leg? It breaks previous structure high. Right? It just didn't just start doing it. It's been doing it. So, and like this could be considered an impulse leg. Why? Because you could use this as your previous structure high. Like this. Impulse leg. Where does price pull back to? You'd pull your Fibonacci from here, $43 to $51. You can see it pull back to the 61.8 and price exploded. Right? So we would be looking for extensions up. The 127, 61.8, and you can see that nobody took profit. And we cleared this, right? So this is a lower high. This is an impulse leg. Let's delete everything real quick. We can do it all over again. We're going to delete everything up there too. It's all right. We didn't want to delete everything anyway. So this would be considered an impulse leg. Where did price pull back to? 51.40, right? Then we got another impulse leg because it broke previous structure high right here. So now we have a new impulse leg. And if we was looking for extensions here, we would look for the retest of the high, the 127 and the 61.8. And we can see that we exploded and we didn't take profit nowhere, right? That's what it looks like. Alright, so then we would just like do it all over again. So this would be our, it looks like it pulled back to 61.8 right here. No, it didn't. No, it didn't. It pulled back to the 50. So this is what I mean by letting the market come to you. So if this was the previous structure right here. You was looking at. Right here. I'll get it right here in a second. And you was considering this right here an impulse leg, and you was pulling your Fibonacci from here to here. This is why I tell people, like, there'll always be a trade. I mean, I've looked at price for, just not good with risk management, but thank you. So if this was your impulse leg right here, this was your new impulse leg. Why? Because it broke previous structure and it put in a new higher high, and you was waiting for the pullback to the 61.8, and so you didn't never got filled right here at 56.15. Well, what you would do is you would just wait for your trade. So you would be pulling this from your lower high, and you would just wait, and price went all the way up here to $94, right? So now this would be your impulse leg. This would be your higher high. This would be your lower high. This would be your pullback. Right? Cool. So then this is where you would buy, or this price would give you the best risk to reward, or whoever's looking at this trade being patient, which is also hard. So if you was looking at this, you would look for the 61.8 would give you the best risk to reward on a retest of the high, right? If you was looking to take extensions on this, you would look for extensions. And we can see that some people took profit at the 120, 1618 extension, right? I hope this is making sense. I just want to provide helpful tips. You know, give away stuff for free, like Mr. Beast. Helpful tips. So now this would be your considered lower high. Like, this would be considered your impulse leg, right? So if you was trying to look at this trade and you was seeing that it broke previous structure and it was making this leg up, you would pull your Fibonacci from here. You would wait for the pullback. It looks like they used this one. This was their lower high here. There's like, we're getting in early. We're getting in early. As early as we can. That's the way I felt too when I bought it, 195. I was like, I bought it early. But so this would be considered their impulse leg. Price pulled back to the 61.8 Fibonacci level. Price pushed up to take profit 1. It pushed up to extensions. If I'm looking for extensions, this would be my impulse leg. I would grab my Fibonacci expansion tool. I would click from here to the new higher high at 185 and back down. I would look for the pullback to the 61.8. You'd have been quick. Looks like computers bought it. And this would be my new higher high. This would be my lower high. I hope to get rich with this one day. Pullback. I hope to help people and make a little money when doing it. Been studying for a while. Should pay off sometime. So this would be the pullback down here to 115, 114.88. This would be the new impulse leg from here to here. Like, I want to try to make this as simple as I can for everybody, you know. And I should be able to. I should be able to teach anyone to trade within 5 minutes. It's this easy, but it's just knowing how to be patient. Like you can see right here, price broke previous structure. It pushed up, it pulled all the way back down, it didn't pull back. You had to be patient to wait on the 61.8. Looks like computers bought it. So now this would be my new impulse leg from 115 to 245, 246. I would pull my Fibonacci tool from here to here. I would wait for the 61.8 Fibonacci level at 167. This would give me the best risk to reward. This is where I bought 170. This is where I bought. So here we go. I'm in. We hold 40 still. My brother's wife has an extra one that I wasn't counting. So here we go. She got hers at 200. So we got a pullback here. We got a new extension, right? Looks like people took profit at 330. But that's okay. We didn't just explode up still. That's alright. Now we can tell other people. And hope the trend continues. Obviously, but there's always the chance. But I think other people are looking at the same thing. So this is the last impulse leg to 245, 250, and that's like if price pulls back down to 170, I'll buy. Well, I bought one here at 195, and I bought some more. But now, the next trade, we've pushed all the way up here to 330, 330, 332. This is where I said if we don't break 170. But we also have this double bottom here. Boom. which is nice, really nice. So if price pulls back to 230, then they would look for the retest of the high. Then we would look for the 127. Then we would look for moves higher. Just a guess. So yeah. If you made it this far, like, subscribe, make sure you comment. Tell me what I can do better. Tell me what you think. Tell me what you're trading. Tell me what we can look at. Yeah. Tell me what we can look at. Thanks for watching.